In fact, David has answered one of the questions that somebody has put into the chat box. Yes, we will be recording these, and everyone who has actually registered for the webinars will be getting a link. It's the recordings are hosted at the back end of my own personal site, and you'll get a password that will allow you to to have access to the recordings. There's loads of other recordings up there as well of previous sessions that we've done over the years, if you want to just dip into those as well. Because I think the one thing we have discovered, certainly since we started running our Forex program, is that in truth, the vast majority of people who come into trading for the first time, or who are interested in coming into this business, they still have to earn a living. You can't suddenly switch from earning your living in whatever way you do, and looking after your family, and then expect trading to deliver the money that you need to live on, and then some. It is possible to do, but it takes time. So it's understandable that the vast majority of people perhaps do this as a part-time, and then maybe a time will come in the future when they can devote to it full-time. But some people actually prefer just doing it part-time, as a supplemental income. So whatever your personal circumstances, it is a great business that will allow you. You can adapt it to fit your lifestyle, which, as I said, why we record as well. Now, before we just move on to the charts, let me just explain a little bit. I know there are some people. I know most of you have probably come across us before, and certainly who we are and what we do. But very, very quickly, this is David and myself. This is where we're actually running this webinar from at this very moment. This is one of our properties down in Hampshire, and this is the setup that we work at. We've kind of reconfigured it slightly, and we've got some slightly different monitors, but this is where we work on a daily basis. We run the Forex program. There are more programs in the pipeline, and we actually trade. We've got some positions on at the moment, and if time permits, we will maybe go through one or two of those and just sort of monitor them. Our own method of trading is essentially, we have tended to move away from intraday on the faster time frames. Now, you will see us on the faster time frames during our webinars, but that's simply because it's easier and quicker to explain some of the concepts that we want to explain to you. Looking at a daily chart, we will still look at the daily charts, and I've got some very interesting daily charts, particularly as we're talking about reversal trading today. But we use the faster time frames just because those, the lessons come through that much more quickly. And obviously with volume price analysis, you can apply to any time frame and any instrument, and you may be surprised to learn that I've actually just in the process of finishing a book about cryptocurrencies, where there isn't, like spot forex, there isn't a central exchange. There's lots and lots of exchanges, but you can still apply volume price analysis, and that book is going to be available hopefully in a couple of weeks' time. But my two latest books, what I've done is I've put together these two books here. One of them is for forex, and another is for primarily stocks, where the methodology is just laid out in worked examples. This one has got over 200 charts in all time frames, drawn primarily from the American stock market, where I really just explain this methodology in more detail. And this is the Forex version, and these have recently gone up on Amazon. And obviously there is the Kindle versions as well. And the crypto book is this one. I must just show you, this is actually David with one of our dogs. We have to sort of take him around in a buggy because he's got a bad back. But this is where we are down in Hampshire, but it's not quite as sunny as the day the photo was taken. Sorry, I couldn't resist. I don't know whether David, I think he's blushing at the moment. Right, this is the crypto book. Here we are in cryptocurrencies, and again there will be worked examples and just explaining about this amazing, fascinating market, which has been around for a few years, but has obviously, as you know, has exploded in the last few months. Very, very interesting, and that should be around in a couple of weeks' time. Right, let me just much as I would love to look at Bertie, I will turn that down. Let me just quickly look at the calendar today, and it's quite interesting because we've actually got GDP for the UK. Move that up a bit. Here we are, this one, and this has really explained why there's been a lot of movement in the British pound this morning. Those are the charts that we have been looking at, so we'll take a closer look at that. And we're actually waiting, we've got 3 minutes to go for the London Open. Now, I haven't got slides on basically how we're going to cover what we mean by the where have we got? There we are. What we mean by reversal trading, but I'm just going to give you three thoughts, if you like, three concepts, perhaps for you to to hold in mind as we go through this session. What do we mean by reversal trading? Well, David and I often say that in some ways or another, we're all reversal traders, no matter what tactics we use. If you use Fibonacci in your own trading, you're looking for levels, you're looking for important levels on a chart where possibly you're looking either to go long or short. If it hits a level, you might sell. If it hits another level, you might buy. That is reversal. You're looking for a point on the chart where the price is going to reverse and you're going to take a trading opportunity. So if you like reversal trading, you come at it from a technical perspective. We use volume price analysis, and we'll look at some charts and explain, one or two examples of how volume price analysis, you can pick up the signals from this methodology and then decide what you are going to do with that signal. Now, you also get reversals, and you can look at it, how you're going to play that at session crossovers. This is a 24-hour market, but it is actually three separate markets within the 24-hour cycle. You've obviously got Asia, then you've got Europe and London, and then you've got New York, and they all have their own characteristics. Different currencies are bought and sold during these different time zones. So it's almost as if, because you've got different traders, you've got different views on the currencies, you've just got different people, and they're all going to have an opinion on what they think should buy the dollar, should we sell the dollar. And so the session crossovers, if you like, what you'll find will happen, particularly in London, you will find perhaps a currency and a currency pair will be moving strongly in one direction. You come to a crossover and you could see a reversal. Is it then setting up for a reversal trading opportunity? And this is where, by looking at the chart, understanding what you're looking at in terms of VPA, that will highlight whether it is going to give you a reversal opportunity, or are we actually going to see a continuation. So that's it. Then we also have reversals based on fundamental news. There are traders who will just look at the fundamentals, look at the news releases, and they will look at the charts that something like a GDP, for example, and they will look at a chart for a GDP and they will say, they will make a decision that if GDP looks like it's been rising or falling, they will take a decision whether to buy or sell that currency. And then, of course, you have sentiment. Sentiment drives this market. And what's happening more and more is, a few words from someone like Donald Trump or Mnuchin, the new Treasury Secretary, and suddenly, it's a completely different ball game with regard to the dollar or the yen or, whatever. In the case of Trump and Mnuchin, it was the dollar. It was talked up, and then it was talked down rather by Mnuchin. And yesterday, Donald talked it up, which is why we have seen some shooting star candles on our daily charts, and also why I've actually got the majors up at the moment, because you see a signal, you see a potential. It is a potential reversal, and if we highlight the euro dollar, which illustrates it very well, we've had a very, very strong primary trend moving up. I know we've had a few little corrections on the way and a little bit of sideways congestion, but then you see this, forget this candle which is here at the moment, you see this enormous candle here. That was Donald Trump saying he wants a strong dollar. Now, within that candle of itself is just an indication, it's just a signal, the first signal that possibly there is a change in sentiment, there is a change in mood, there is a change in the money flow towards the US dollar. it hasn't actually followed through. Why? Because the dollar has continued to weaken. This is a daily chart. When you, if you as a trader trade the longer term time frames, you would see that signal and you would say, yep, there has been a change of sentiment. Is it going to change my view that the fact is this a reversal? Not necessarily, because this is only one signal. Your time horizon is based on the daily chart. If, on the other hand, you are an intraday trader and you are watching maybe the 15-minute charts here, you would take an entirely different view. When you saw that weakness come into the market on this time frame, let's go back to the 30-minute, which was probably easier here. You would see something on the daily, on the 30-minute chart, on the faster charts, you would see that as an opportunity. It really does come down to your horizon, your trading horizon. Are you on the faster time frames or are you on the slower times? And there really isn't any right or wrong way to approach these charts, approach sentiment, and approach the technical picture that you see on the charts. And finally, what I was going to say is, I said, depending on your time horizon, what we're looking for in reversals, are we seeing a major reversal? Are we seeing a major reversal in the sense that we have seen, for example, let's go back to the euro dollar here. Okay, this is what we call a primary trend. Yes, we have seen some corrections. Yes, we have seen some sideways price action, but in the main, we are seeing higher highs and higher lows. If that is a perfectly reasonable definition of a primary trend. Is this primary trend, from this reversal signal here, are we going from primary in the sense that we've got an uptrend into a primary downtrend? Clearly not. When the market is in a downtrend, sometimes we have what's called a V-shaped reversal. In other words, off one candle, the market simply turns around and moves in the opposite direction. And another definition of a reversal is, are we primary to primary is a major reversal, primary to minor, and primary to minor is a correction or a pullback. So for example, let me just get some drawing tools out. There we are, let's get the spotlight. In this correction here that we saw on the euro dollar, that's actually a 3-candle correction, reasonable number of pips. Would that have been tradable on a faster time frame? And the answer is most clearly yes, simply as is this shooting star candle here. Why? Because it's a very wide range. There would have been a lot of good two-way price action, probably a lot of volatility as well. But if you are in this for the primary trend higher, in other words, you've got higher highs and higher lows in this trend, you would simply see that, well, it is a pullback at the moment. Yes, on the faster time frames, there'd have been traders going short there, but look what's happened today. It looks like the primary trend has kicked back into life. Now, whether that is valid all depends on what we see on the volumes, that the participation, the activity that we see under the candles. Right, I'm sorry that's gone on slightly longer than I anticipated. I'm just going to pass over to David and to see what he wants to say at this point.
Thanks, Darling. One of the I think what this really highlights is this whole issue that we all have to deal with as traders, which is very much focusing on whatever is your time horizon and what it is you are trying to do as a trader. Because, and I guess reversal trading probably highlights this more than any other, because what it forces you to appreciate and to think about is, am I approaching this as an intraday trader? Am I approaching this as a scalping trader? In which case, the reversal that I'm taking will almost certainly be a short-term minor reversal in an otherwise longer-term trend. And the way you have to think about it is very much in this way, that whatever you are trading, in whatever direction you are trading, someone will be trading in the opposite direction in a different time frame. Because as we explain in the Forex program, all price action is self-similar. You can think of it in many different ways. I mean, one of the analogies we use is the Russian dolls. I'm sure you've seen them, where you've got a tiny little Russian doll in the middle, and gradually you get larger and larger until you come to the outside one, which is huge. And in a way, that is all that is going on in terms of price action. All price action is self-similar. In other words, what is going on in a 5-minute chart will be happening on a 15-minute, on a 30-minute, an hour, and so on, out to the monthly chart. And it is all wheels within wheels. So a reversal on a 5-minute will be a minor pullback on the 15-minute or the 30-minute. And perhaps an hour or a daily will be in bullish trend, whereas on a weekly or a monthly, the particular pair will be in a bearish trend. It's not easy. Part of the unraveling of that is really to focus on a multiple time frame approach. Whatever time horizon you are trading, it's so important to have a multi-time frame approach. In other words, we generally recommend having 3 time frames. So if you're a scalping trader and you're on MT5, you might have a 1, 5, 15. Because ultimately what happens on a 1-minute time horizon, if there's a reversal building on 1, it will ripple out to 5, and that in turn will ripple out to 15 if it is a true reversal in that particular time horizon. Now, in the context of a daily chart, that will probably be just a minor reversal in the dominant trend. In other words, the primary trend. So if we're in a bullish uptrend, if we see a reversal building and we're trading that trend, we may be trading the pullback, that's fine. As long as you appreciate what it is you're trying to do as a trader, and that's the important thing. It is focusing on that time window, your field of vision, if you like, that you're focused on. So when you're a scalping trader, you're looking at 1-5-15, for example, your slowest time frame for consideration might be 30 minutes. It will be pointless looking at a weekly chart or a monthly chart. You might have the daily chart up for context, because what the daily chart will give you, it will give you indications of changes in volume. It will give you indications of possible sentiment for the day. But thereafter, what you're really focused on is your time horizon. So as I say, as a scalping, it might be 1-5-15. If you're a longer term, let's say what a lot of people call a swing trader, but really that's what it comes down to, is really reversal trading. In other words, you're looking for those reversals. You might be doing that off a 30-minute, off a 60-minute, even off a 4-hour chart. It is all about context. And the power of volume price analysis is that a lot of the focus obviously is on getting in. We all focus on, where are we going to get in? Let's get a position in the market, etc., etc. But actually, a lot of the power of VPA comes thereafter, because as you're in a position, what you really want to know is this position developing into a longer term trend, which I can then hold? And if I'm in that trend and I see one of these minor reversals coming, what I really want to know is this a minor reversal? In other words, just a pullback against the position that I've taken in the market, the longer term trend position I've taken, whatever that may be. That could be a 5-minute, 15-minute, doesn't matter. That will reveal whether you are likely to see a more determined change in trend, or whether it is simply a pullback. And within all the books we do, in all the courses and all the study and the programs, that is a key concept where we explain how to identify the reversal in a longer term trend, whether it is a true reversal in trend or whether it's just simply a minor pullback. And of course, if you're in a position, that's something you want to know, because once you have a position in the market, what you want to understand is whether that move against you is going to develop into a longer term true change in trend. In other words, from primary trend to primary trend, from bullish to bearish or bearish to bullish, or is it simply just a pause that you get in all trends that develop? No price action ever goes up or down in a straight line. It doesn't happen. The market trends higher, it then moves into congestion, it pauses, goes sideways, then you get another leg, then maybe you get a reversal. That is how price occurs all the time, and what you're constantly looking for. And this is a nice example. We're on the 5-minute here in terms of cable. We've got news coming up in just over an hour or so, hour and 15, and it's a big news item. So what we're expecting to see at this point is we've had some decent pound buying. I'm looking across the charts. We've got decent pound buying pretty much across the pound complex. Now the market is going to go into a congestion phase because we've got major news items coming up. So the prospect of further trends developing over the next hour or so are unlikely. We're more likely to see, what are we going to see? The chances are we're going to see a congestion phase building, which is precisely what we've got here. We're building a ceiling, and up there at just above 142.70 odd area, we've got the little yellow pivots, which we use for describing those areas of resistance, where Anna's cursor is there, and also the platform of support, which is building below. And typically what we expect to see now is contained price action. And in addition to that, we expect to see the volume diminish, because the markets are now going to pause, they're going to wait. Now, what you will then see, probably about 10 or 15 minutes before the news comes in, you'll see positioning, you'll see the institutional market makers move into this market, and that is a time at which you will like to see trap moves develop, volatility comes in, and all of that is then described with volume. And it is one of the places where the institutional markets makers make all their money, in the news releases and in the positioning ahead and what goes on thereafter. And all of that, of course, is described with volume. You'll see a massive surge in volume, and you can see it to some extent here. As Anna said, we've gone through the London Open, and you see the volume pick up as you move through into London. And this is typically what you see in the Far East Asia session. Volume is relatively light. Then as we come into London, volumes increase. It starts to be the deepest market. And when we have London and the US sessions running in parallel, that is the deepest volume of all. And that is then reflected in the price action and the volume associated. So what we're seeing now is classical. It's what we expect to see. We're moving into a congestion phase. Volume will diminish. Price action will be relatively contained. And then when the news is released at 9:30 UK time, which is about an hour and 15, the market will explode. Volume will ramp up dramatically. There will be all sorts of trap moves coming in. And from the volume that then follows in the next 5, 10, 15 minutes after that news release, you can then interpret what it is the institutional market makers are doing. Are they buying? Are they selling? Are they trapping? Are they participating? Are they not participating? And at that point, you can then decide to take a position in the market. Now, you may well decide to be a news trader in that event, in which case you're maybe trading a fade, a reversal in that environment, which is a very fast reversal within perhaps the news release itself or a few minutes after, or indeed you may decide to take a position before, in terms of how the news release is going to impact the market. There are so many different ways to trade the market. There is no right way and no wrong way. It's just the way that you find works for you. I'm just going to pass back to Anna at that point.
This is actually very typical on this 5-minute chart of what you see ahead of, just before a London Open, and certainly as you come out of Asia. This is what we mean by a congestion phase, where basically the price is contained. You can see here there was a very strong ceiling of resistance in the 41.91, 41.90 area. You can see the number of times the price sort of tried to get through, but there really just wasn't sufficient effort, sufficient volume, if you like, activity to push it through. In fact, then the price actually moved down to a support level, 41.65, moving out of it as the Asian traders closed up for the day. This yellow line across here, these colors that you see at the back of this on this chart, this is what we call the volume point of control. The volume point of control is actually looking at it's got volume, price, and time. Time is really important on charts, and it's the time that a market or an instrument stays in this congestion phase. And it's also the time, if you like, in this period here, price was sort of very clearly range bound between the resistance ceiling and the support platform down here. And what also happens is, during this period, if you like, it's when traders they're happy to transact. You know, no one's really very interested in moving the price strongly in one direction or another. And what the volume point of control does, it tells us, it builds this this period on the chart, and the longer it stays within, you know, contained in this price range, when you have a breakout, and you'll have probably read that you know, a lot of traders really hate breakout trading because they say there's too many fake outs. And you can see here there was a fake out here, it tried to break away but it was supported, and then it went back into the area of the VPOC. They don't like it because, as I said, it does have a high percentage, if you like, of fake outs. But if you understand what volume is doing and whether the price action that you're seeing on the chart is fully supported, that there is now a determination to move away from this congestion phase, it'll give you the confidence. It will give you the confidence to say, no, this is not a fake out. This is actually a genuine move higher or lower. Now, what you can also see, because this indicator works in real time, can you see the histogram at the back of this price action that is that we're seeing at the live edge of the market, where again we're building another congestion phase? And the reason, as David said, we're building congestion phase is because the market knows we have this important news release at 9:30. So if you're a cable trader and you've only ever looked at the chart and you've only ever looked at your you know, your technical tactics, this is an important, you know, you have to factor these things in. Whether you use you know, the volume, and you look at the volume, how is it responding to what the price action is doing? What we're seeing here, we're seeing falling price, but we're actually seeing falling volume. What that tells us is that if this move is going to go through, first of all, it has to break the support platform, but it also has to have some effort. Wyckoff's third law of effort and result, the two have to agree. If they don't agree, then you have an anomaly. And what anomalies do, not only do they highlight potential trade opportunities, but they also help you to stay within a trade. And one of the best examples I can come up with, this one in this little piece of price action here, forget what is going on at the live edge of the market. If you look at this, as I said, this was a successful breakaway from the volume point of control. Once it got through the ceiling of resistance, it also, I happen to have moving averages on my chart. This is the 200 MA. A lot of traders like to use the 200 MA. Nothing wrong with that. Once it got above that, this is my 8-period moving average. Moving averages work absolutely brilliantly in trends. That's what they're designed to do. And you can see the price stayed above the moving average quite happily, because that's what a moving average does. That's what it's been designed for. Have a look at the moving average when a market is in congestion. If I put the 14-period moving average here, you would find these two averages would simply snake along and they just don't do their job. But that's not what they're designed to do. They're designed for trends. So this is a very, very nice trend. We had a pullback here. We had weakness on this candle here. But look at the volume. The volume wasn't great. So if you like, that was an anomaly. Yes, there was weakness. Yes, there was selling coming in. But looking at that volume profile told you that possibly this move to the upside wasn't done yet. And in fact, we had two further candles coming in. But then we had this candle here. We had very, very high volume and a wick to the top. And look at the spread of the candle. Not massive compared to the volume that we had under this candle and this candle. So effort and result were not in agreement. What happened? We had a little minor reversal on these two candles, but was it going very far? Well, look at the volume. On the first one, a decent amount of volume, but what about the second one? Nothing like it. About not half, but certainly not, you know, considerably less than that. What is that telling you? That's telling you it's not going very far. And exactly happened next? You had an up candle. Now, because we have the news coming, we know this price is contained within the range that it is at the moment, with the pivots signaling it. Now we've had another attempt to move lower. We've had reasonable volume building. We had that candle come, the same volume as on that one. Yes, it's broken through the support platform at 42.36, but it's, you know, there is still price support for cable at the moment. So this is how you look at what is happening at the live edge of the market with the candles and the volume profile. And I'm using this not because I'm thinking that this is time possibly to take a reversal to the short side, but just trying to highlight what it is that you would look for in terms of price action and volume. It just happens to be cable. We've chosen it because, as I said, we've got the news coming along at 9:30, and we'll wait to see if this is genuinely going to be an opportunity as a reversal, or in fact it's simply a spoof move, and in fact it's just going to go straight back into consolidation as the market waits for the news release. David, is there anything else you want to say to that, or do you want to move over to David, because he's been looking at other charts while I've been looking at that at cable, and I'll just keep an eye on it while he goes through his charts.
Just changed over to my screen. You should be seeing that any minute. Hopefully that should be coming up now. That's great. Okay, just move the chat box out of the way. I've actually been I've been following pound CAD, so staying with the pound for the time being, purely because of the news that's coming up, and it's a very interesting set of charts. I've also got it on MT5 as well on another screen, so I'll pull that in a moment if I may. Basically what we're looking at here is, just to highlight, we've got the 5-minute chart here at the top left, 15-minute top right, 30-minute down here, and this is the daily chart bottom right for pound CAD. And over on the right here, I've got one of our indicators, which is the currency strength indicator, which I will reference because it is very pertinent to the whole business of reversal trading. And what you're looking at on the left here is basically the individual currencies themselves isolated out. In other words, each one of these lines represents a currency. The yellow line here, which you see at the top and just starting to roll over, is the British pound. This purple line here is the Canadian dollar. The red line is the US dollar. This one is the Japanese yen. The blue is the Aussie dollar. The grey is the New Zealand dollar. And the green here is the Swiss franc. And over here, this sort of orangey color is the single currency of the euro. The Forex market is a market of what we call mean reversion. In other words, no currency is ever going to go to zero. Many people suggested the euro was going to go to zero. Ultimately, it may in years to come. But for the time being, the euro is here to stay. Currencies don't go to zero. Stocks do. But currencies don't. And what they do is they constantly oscillate between strong and weak and back again. Now, that's not to say, obviously, that a currency will always stay in the same position or a currency pair will always stay in the same position. But generally speaking, that is what they do. It's a market of mean reversion. You can think of it like a guitar string, or you can think of it like an elastic band. Guitar string is probably the best one. You pluck the string, it oscillates, and then it returns to rest. And that's pretty much what goes on with currencies the whole time. They are constantly moving from strong to weak, in other words, from up here, where it's very strong, and then they go down to the bottom to weak again, and then they come back up again, and then they go back down again. It's a constant process of oscillation. And the currency strength indicator isolates all these currencies individually so that you can actually see what the individual currency itself is doing, and then match it up against a particular currency pair. Now, I happen to have the pound CAD up here at the moment because There was a lot of strong buying in the pound this morning. This yellow line was rising very strongly, and that was pretty much universal across the pound complex. We saw pound buying coming in from around about 6:30, pretty strong. It's got up into this sort of what we call overbought, in other words, very strong position, and now it's starting to sell off. And if I just flick up really any of these, just pop up the 30-minute chart, which makes it a little bit easier to see. This was the rally that we saw this morning. Bear in mind, this is now spread over, this is 30 minutes, so we're looking at an hour and a half, and this is 2 hours. Now we're into 2.5 hours of price action. And when you look at volume price analysis in this perspective, what we saw in this signal here, we saw some weakness coming in. This is a classic anomaly. We've got high volume coming in, which is what we expect to see because we've seen Europe open here at 7 o'clock. We're moving through towards the London session, so we're starting to see volumes build as the London market starts to open. This is a classic sign of weakness. Why is it a sign of weakness? Well, we've got a lot of volume being driven into the market, but the actual market isn't going anywhere. What's happened is tried to rally and it's fallen back. And the interpretation from that is very simple, because what we should have seen if Wyckoff's laws were held good, in other words, the effort and result were in agreement, then for this amount of effort, we should have seen this candle close up here somewhere, probably and certainly wider than the previous one, because if this is what we expect to see from this amount of volume, albeit that we're moving into a new session, as volume increases, we should expect to see an increase in the price spread. In other words, this should have closed up here somewhere, possibly even higher. So the interpretation from that, just that single candle and single volume bar, is that within that volume, there must have been a lot of selling, because if this were all buying, the market would have closed up here. It hasn't. It's closed back, not quite near the open, but certainly with a narrow body and a very deep wick. So the interpretation is this is a sign of weakness, because if it were a sign of strength, the market would have closed with a nice widespread up candle with very limited wicks to top and bottom. It hasn't. It's closed with a deep wick. So that would have been a signal of weakness at that point. It's not something necessarily you would trade. It is just a signal that the market is struggling at this point for whatever reason. It can be news related, it can be session related, it can be a trap move, it could be all sorts of different reasons. But at that point, the market is struggling. And one of the things that it's quite difficult to convey in terms of volume price analysis studies is that when you see signals like that, it's very easy to get excited very quickly and think that the market's going to reverse, market's going to reverse. It happens occasionally where you do get what we call a V-shaped reversal. In other words, the market reverses off one candle, off one signal, but generally that is not the case. There are lots of different reasons. It is, we explain it in the program, it's also covered in the books and all the various examples that we cover there. But generally speaking, what you see is you see a sign of weakness coming in, and as in this case, it's confirmed again, because what happened with the next candle, an almost identical repeat, in this case, it actually closed with a red body. In other words, the close of the candle closed below the open. The color of these is not really relevant. What is relevant is how much volume is being driven into the market, the associated price action that is aligned with that volume, and how that then relates to what has gone on prior to that particular candle and groups of candles. And at this point, this is now starting to signal weakness, because we've got two identical candles pretty much, and both of them are saying pretty much the same thing, that we are seeing a phase of weakness developing in this particular pair, in this particular time frame. And we've duly seen that follow through into the next candle. These little purple arrows here are indicative of volatility. So we're now starting to see volatility coming in. And I won't go down that route, but that's that's a topic for another day. So what we're seeing right now is this reversal. And if we go up onto the faster time frame, and you can see here the pound is selling off pretty strongly at the moment. The steepness of this line is giving us a clue as to the strength of selling or the strength of buying. Where you see this rising very strongly, it's telling you there's strong buying. where you see it's falling sharply, it's telling you strong selling. And if I move over onto the multiple currency strength indicators, which I've got here, and this applies the multi-time frame approach to indicators. I mentioned earlier about applying it to charts. It's equally important that you apply it to indicators as well. And what we're seeing here is very classic. We've got a 5-minute time frame, a 10-minute time frame, a 15-minute time frame, and this is out to our 30-minute we were looking at in terms of the chart. And what are we seeing? We are seeing very strong selling in the pound. Forget about which currency it is against, but we're seeing very strong selling in the pound. We had this strong rally just prior to when we actually started the webinar. This is 7 o'clock, 7:30, 8 o'clock. We're now 8:30-ish UK time. We've got very strong selling in the pound on 10-minute. We've got strong selling in the pound on 15-minute. We're starting to see strong selling on the pound on 30-minute. And what that is telling you is that, and the analogy we always use is the ripples of a pond, because if you throw a stone into a pond, what happens is it lands and the ripples start to move away from the point of landing. And this is what happens in the market. If this is a true reversal, it looks as though it is, we've got reversal here, it's rolled over into the 10-minute, it's rolled out to the 15-minute, and now it's rolling out onto the 30-minute as well. So we've got a very strong reversal. Now, obviously, this is against the context of what is going on in terms of the news release, which is coming up at 9:30. Now, whether you would choose to take a position right now as an intraday trader is a personal one. You may be comfortable taking something that close to the news, you may not. Personally, I wouldn't, Anna wouldn't, but some traders would. And indeed, as I said earlier on, some traders would trade the news. They would deliberately take a position ahead of the news on the expectation. They may have looked at, for example, the trends of GDP or whatever the announcement may be, and based on previous pieces of news over the last week, let's say, for the UK economy, they may feel that on balance, it is a position that they're prepared to take because they consider that the news release will be either positive or negative for the pound, and that's the decision they've taken. If you're a technical trader and you're taking a position ahead of the news, you may decide you're comfortable with that, you may not. Or you may decide you want to wait for the news, as I said before, wait for the volatility to subside, and wait for the volume profiles to give you a clue as to whether the institutional market makers are buying or selling, or they're not participating, for example, they're trapping. That is a decision for you. Now, in terms of just going back to the pound and the sort of a pair that you might look to trade this against, if putting the news to one side for a moment, what are we seeing right now? Well, we're starting to see the dollar spring into life. This red line is starting to rise quite strongly. It's starting to kick up on the 10-minute. It's starting to pick up on the 15-minute, but over on the 30-minute, not a flicker at the moment. And that is all to do with, as I said earlier on, it is focusing on your primary time horizon. You have to decide what it is you're trying to do and in what time frame. Because if I slide this chart over, this is MT5. Let me just pull this over onto the screen as well. This is pound CAD. Now, this is one of the beauties of MT5, which we're rolling out very shortly, is that it gives you a huge variety of time frames. If you're familiar with MT4, you'll know that MT4 is it can be very restrictive in terms of time horizons, because you basically got 1, 5, 15, 30 hour, 4 daily, weekly. Now, what the MT5 gives you, not only is it a multi-asset platform, so it introduces indices, commodities, and a lot of other related markets too. But it also gives you a lot of functionality that you don't have in MT4. For example, here you can see we've got different time frames. And what I've chosen here is the 8-hour time frame, because what that does is it really breaks the market up. This is a 24-hour market, but it's not a 24-hour market of uniformity. Because as the market sessions unfold, as you move from London and Europe, and you think about it logically, London and Europe, what is the focus? Well, it's primarily European currencies. You know, it's the pound, it's the euro, and to a far lesser extent, you know, focus on commodity currencies, Aussie, Canadian, and so forth. And then as you move into the American session, obviously the focus there is very heavily on the dollar and the Canadian and to a lesser extent the commodity currencies. And then gradually, as you move into the Far Eastern session, in the final sector, the focus there is very heavily on the yen, the dollar, and the commodity currencies, and very little focus on the European currencies. That is how the focus shifts the whole time. So using it, this 8-hour time frame is a really nice way to break the market up into those 3 specific sectors, if you will, sections of trading. And of course, what you also see is the volume is also very reflective, because these very low volume bars are the ones that are associated with the Far East Asia session, whereas the 2 higher volume bars are associated with London and the US. And the reason I've chosen this just for interest is that 2 things. First of all, if you're trading this as a longer term trend, the current pullback in the pound CAD that we're seeing on the 5, 10, 15 and 30 is of absolutely no relevance whatsoever to you. You are basically holding this as a longer term trend position. We've had this very bullish run which has been going on for some time, since the early part of the year. It's been there has been volatility in there for sure. We had volatility come in here to the downside, the market then reversed, which is what we expect. Same here, into that congestion, building the trend. The trend monitor here at the bottom is another indicator we use a lot to help us stay in a trend. And then the last few days we had this reversal, but look at the volume under it. It's huge. It didn't follow through. There's a wick to the underside. There was a support platform below. And we're now starting to see this build. Now, ultimately, is this going to build into congestion phase in this region? Well, we've certainly got a strong level of resistance in here. This is on the support and resistance indicator, and we've got this floor building here. Now, from a longer term trend holding position, you've got to make a decision at this point. Am I going to hold through this? I'm expecting a congestion phase to build. The positive news is that we had this big surge in volume, but the market didn't collapse. It went down to this platform and now looks to be holding over certainly yesterday and trying to recover again today. That is your decision. That is your time horizon. You don't care what's going on a 1-minute time frame. You don't care what's going on a 5-minute time frame. Your focus of attention is on the hourlies, the dailies, and probably even the weeklies in terms of this particular time horizon. So let me just scroll that out of the way. I'm just going to pass back to Anna at that point.
Right. Well, actually, now you've got the CSI up there, could you just say, because we've got some people on quantum, and just say there's reversals, you can talk through the CSI. Is that okay? Or do you want me to do it? Do you want me to do it? Yeah, fine. Okay, I'll move over back, yeah? Okay. As you probably heard me say, talking about the CSI, we've talked about reversal trading, and I know we've got some of our quantum users in the webinar at the moment. So let me just go back to what I was saying before. I mean, we talked about reversal trading, looking at charts, looking at candles, looking at through the prism of volume price analysis. But as I said, there are quantum users in the room, and this is our own company, quantumtrading.com, and the indicator really, David's already alluded to it at the moment. I'll just bring up my version here. We've actually developed a whole set of specialist tools to help us with reversal trading, to kind of, to save us it's a shortcut, if you like, to highlight, well, when is a currency, not a currency pair necessarily, a currency looking to reverse, which is why we looked at the currency strength indicator. I'll just move this over here like this. And each one of these lines represents an individual currency. Let me just slow down the time frame slightly because it's going to be changing all the time. There we are. Let's have a look at 15, and let's have a look at the hour. No, look at the 4 hour. Yeah, here we are. Each one of these is a currency, and essentially, when a currency reaches an what we call an overbought or an oversold, then we know that it is reaching a potential reversal point. We don't know against which other currency, but it gives us the heads up. I mean, the two most important currencies in this market are the US dollar, which is the red line, and it's also the Japanese yen. Now, the Japanese yen is this magenta line. It's not actually doing very much at the moment. It's moving sideways, certainly on the 15-minute chart, and on the 4-hour chart, it's being sold off. And you can see here, this was the move higher in the US dollar, talked up by Donald Trump. But can you see here, it's kind of turning back down again, even though on the 15-minute chart, it looks like the market is going to be buying US dollars. Again, it just goes back to time frames. And I know sometimes I can hear myself saying this over and over again. We do sound like records stuck in grooves, and we keep saying this all the time, that it really does come down to the chart that you like to trade, your time horizon. Do you like trading the 5-minute chart? Do you like the 30-minute chart? And one of the biggest issues we have to grapple with as traders is that when we see a signal on our time frame, and we get terribly excited and say, oh great, I've seen a potential setup in my time frame, and it doesn't come off. We then go hunting around in another time frame. But I was right in that time frame, so I'll just hold on because, you know, it's going to come good, if you like. We do it all the time. All traders go through this process, and it is difficult, it is hard. But if you understand price action as being self-similar, so what you see on a longer time, on a slower time horizon, on a daily, on a 4-hour, or an 8-week, an 8-hour chart is one perspective, if you like, that's the market's view, that's the sentiment of the market towards that currency pair in this time frame. And you, for whatever reason, would like to trade the faster time frames, well, so be it. It doesn't really matter. And you could be trading, you could be taking a reversal against what you see in the slower time frame. It's perfectly valid. But if you take that and it doesn't, it goes against you, it doesn't mean that you were necessarily wrong. You were just, your timing was a bit off, as it were. We always say this, in this business, it really is about timing, and it's deciding the time frame that you like to trade, how long you'd like to stay in this market, and accept the fact that in one time frame there will be a picture of a pair, and we saw exactly that with cable. In fact, we saw it with the majors. Just go back to the majors here on the daily. There we are. That is a trend. That is higher highs and higher lows. Then yesterday we had this correction. There was a technical reason for that correction to do with the previous candle, which we'll talk about in another session. But in that pullback yesterday, in that down candle, it has got a wick to the top and wick to the bottom. But in that range, on the faster time frames, there would have been an opportunity to take a reversal against this dominant trend on the daily chart. Now today, the primary trend, which is higher, looks as though it's kicked back in. It's pausing at the moment simply because we have GDP coming up at 9:30. And to return, as I said, the CSI, the currency strength indicator, just highlights, it just gives us a quick heads up of what an individual currency is doing in any particular time frame. And this is part of what we call our currency dashboard, which I don't really want to go through at the moment. We will do that. We will cover that on a separate occasion. But this basically takes the data from the CSI, the individual currencies, and actually gives us another piece of information, another piece of the jigsaw, and tells us, what are the pairs doing? So, for example, I want to see what the pound is doing on the heat map. This is our heat map, and what is market sentiment towards the British pound? Well, we can see here there's a lot about a pound buying at the moment. What this little red tells you in these cells is that overall the sentiment is very positive to the British pound, but in these red cells, in these faster time frames, there are opportunities perhaps to sell the British pound. And really, that is all we are doing. We are just looking for trading opportunities, and finding those trading opportunities means identifying the points at which a currency and a currency pair is going to reverse, and then we can either go long or we can go short. Is that it, David? Anything else you want to say on that one? Brilliant. And as I said, if you want more information on the specialist indicators, you'll find everything at quantumtrading.com. And as David said, we have actually now completed MT5. MT5 is just, and we'll actually be moving, really be using MT5 more and more, certainly in these sessions, and encouraging also our quantum forex program students to move to MT5. Nothing wrong with MT4, you can still use MT4, but MT5 just gives you the flexibility of these additional time frames, which are actually really important if you are looking for reversals, and certainly if you are on the faster time frames, because you know that currency pairs can move a reasonable distance. You only have to look at something like the pound yen on the 1 minute, the 5 minute, and the 15. If you can capture those moves in the 2 minute, the 3 minute, the 4 minute, and the 10-minute chart, it makes all the difference in the world. And David has got one more thing to say.
If they invest in the indicators, they can transfer to a new platform.
Oh, and as David has reminded me, we have a policy with our indicators that if you invest in either individual indicators or the full package, and you then decide to change platform, so you start with MT4, but you want to go to MT5 or you want to go to Ninja, you can do so at no extra cost. With regard to these sessions, what we're going to do is we're just going to send out individual links, because we have to account for different time zones. I've had emails from a lot of US traders. They obviously can't make the London open because it's just too early for them. So we may repeat reversal trading for the US session. If you want to come along to that, that's lovely. We'll see you again. But the topics that we cover, you'll get an individual link, and if you want to come along, you are more than welcome. And as we said, it is recorded, and everyone who's registered for the webinar will get a link to that recording. So all it remains for me to say is to thank you so much for coming along today. I hope you've enjoyed it. I hope you've learned something that possibly you didn't know before. Have a great trading day, and we'll catch you next time. So take care, everyone. Bye.